Hi, Stephanie Anderson with Business Sense in Spokane, Washington. I'm here to educate you on QuickBooks Learning and what the Chart of Accounts is, or COA. What does that mean? So over the next couple of days, I'm gonna give you more information about QuickBooks and setting up your QuickBooks properly, especially QuickBooks Online. So today we're going to focus on Chart of Accounts. So what is the Chart of Accounts? The Chart of Accounts is the backbone of your financial reporting. So if you set up your Chart of Accounts incorrectly, you might have reports that don't look accurate or things are in the wrong place. So however you design your Chart of Accounts, that is how the reports will look. And when you're looking at the Chart of Accounts, there are different types of accounts to think about. And so the first three types are the assets, liabilities, and equity of your business. So assets are things that the business owns, bank accounts, inventory, equipment you use to run your business. Liabilities are things that you owe, the business owes. So payroll taxes, sales tax, money that you loaned maybe to start up the business, or credit card debt, things like that. And equity. Equity is the value of the business, or the value of the money that you've put into the business. So all of those accounts equal the balance sheet accounts. So if you were looking at your balance sheet, you would see these types of accounts. So that's the formula for the balance sheets, to make it very simple and clear. So you would put all of your assets under assets. So that could be your bank accounts, that could be the inventory, like I'd mentioned, that you owned. And then the liabilities would be the things that you owe to other people, and that would be sales tax and payroll taxes and things like that. And then the equity is the difference. Now, the next part of the Chart of Accounts are the profit and loss accounts. So profit and loss is a statement of how your business is doing month over month for a period of time. And so those accounts are income accounts, cost of goods, and expenses. So income accounts would be different revenue streams that you have in your business. So if you are selling a service, let's say, then you could maybe break out the top 3 services that you're selling if you're interested in looking at that on a monthly basis. So you could, if you're a lawn mowing service, you could be looking at mowing and edging, you could look at fertilized services, or maybe tree removal, if those are the services you offer. And then the cost of goods accounts are the ones that are directly related to performing those services for your customers. So that would be payroll, that would be gas for the machinery, to run the lawn mowing equipment, those types of things, rental equipment, things like that. And then the expenses are the overhead, the expenses that you're going to pay regardless if you had any jobs or not. So that's kind of a good outline for how the Chart of Accounts affects the business. And this is super important